Hey guys, Mike here. So Jerome Powell spoke today, and yes, the Fed is going to go ahead and increase the rate of tapering, and they can see multiple interest rate hikes in 2022. And this lines up perfectly with the video I was putting out today for you, because Cathie Wood at Ark Invest did her monthly update, and she was very honest in addressing inflation, what it's done to the Ark Invest ETFs, and it's something, if you hold growth stocks, you definitely want to hear what she has to say, because she's pretty dang honest about it. And there's one sector in particular that she is just all in on, and she's betting big on. She has a lot of money piled into this. I'm going to show you 3 of those stocks, why she's into them. You'll hear her own words. And at the very end, she gives a very plain or honest answer to a question she got on a Bloomberg interview a few days ago as well. And I like the honesty, and this is one of those uphill battles. If you're in growth stocks, you look at your portfolio, it's pretty much red. I'm talking high growth stocks. And so with the interest rates hikes, with less liquidity going to be in the market in 2022, it is interesting times, okay? And so first, let's get into what Cathie has to say about inflation and what she sees happening with growth stocks, especially in her portfolio.
Could you provide a few examples of stocks that would thrive in a inflationary environment? So innovation-based stocks that would thrive in an inflationary environment.
Well, given the valuations that we are seeing right now in the innovation space, this is the space that probably has incorporated more inflation expectations than any other part of the market. So if we're right on the kinds of revenue growth that we're going to see in our strategies, I think that the inflation risk has pretty much played out, and that we would probably be able to that the revenue and earnings growth rates would be able to play out. Now, just to play out in the stock prices themselves.
But could you share some additional thoughts on kind of outlook for growth stocks in a rising interest rate environment, if that happens in 2022 and beyond?
Sure. Well, we got an interesting preview of the answer to that question in late 2016. So if you'll remember back then, the Fed basically had said, we are going to start increasing interest rates, or they had already started. I can't remember. The market began to run with this thesis that growth and inflation were going to pick up. And in that quarter, which was a nice quarter for the broad-based indices, our strategies were down. But I remember saying during that time and after that time that we did not think that that this was an indication that innovation stocks, growth stocks generally, would be on the outs. In fact, we were looking at what was happening as a broadening out of the bull market. So I know there's a Pavlovian response: interest rates and inflation up, growth stocks down. And that's not always the case, especially if, just like this time, in fact, this time in spades, the market has already decided that inflation and interest rates were going to knock our kind of strategies off. And so we've already had that happen. And now I think fundamentals of the companies are going to be more the order of the day in terms of determining stock price behavior.
And so like I said, that was from yesterday, so it's hot off the presses, what she believes. And 2 things that stuck out, for me at least, in what she said, and I'm curious to get your thoughts in the comments, was one, at the very end, she talked about valuation will drive stock price, right? And I thought, wow, she's talking about the institutions. And, for example, what does all the institutions complain about Tesla for, right? The valuation. That's why you kept shortening it. And obviously it's broke a lot of short sellers, okay? And it's performed very well. They're a very dominant company. But what does that mean for these other companies who are just getting their legs underneath them, who aren't a Tesla, right? And so, that's going to be interesting to see how that plays out. Plus, saying that inflation is pretty much kind of baked into the cake, right? Some of these stocks, and that's why I showed you all those charts as she was speaking, was that, you know, some of them were beat down 20, 30, 40, 50%, some of them more than that. And so, you know, how much is baked in, how much is still left to be baked in? Because of those interest rates hikes, that's the one that probably worries me more than any of the rest of them, not them stop buying bonds or anything. Because for high growth stocks to continue to keep those multiples up and grow at the rate they need to grow, they're usually borrowing a lot of money, raising a lot of money through stock, bonds, things like that. And so that's going to go up now, right? It's going to cost them more. It's going to push their profit horizon down the road even more. And so how much are the institutions willing to, you know, get into these stocks now and hold them for even longer and wait and wait and wait? So that's what we got to look at on that. That was the two things I kind of took away from that, even though there's a lot of good stuff in there. And so, you know, looking at the sector she's pretty much been into and she really talks about a lot whenever you see her get interviewed is the genomics and healthcare sector in general. And three stocks she's big time into, you know, I'm going to show you right now, and then I'll show you why. And the first one's Teladoc, which should be no shock. It's the second biggest holding she has, number one in her genomics ETF. And you're looking at, in the Ark K alone, she has $961 million. You look in the Ark W, she has $192 million. Ark G, $379 million. Ark F, another $79 million. And so she is loaded up on this stock, and here's why.
The chief technology officer and data scientist at Teladoc right now has united the AI expertise of both Livongo, which they bought, again, focused more on chronic diseases, diabetes, mental health, and the data scientists at Teladoc, which was much more focused on the acute space and physicians. He's originally from Memorial Sloan Kettering. He is doing a phenomenal job at creating a data platform here, the likes of which no one will have in the healthcare space. In the case of Teladoc, I believe that our compound annual rate of return expectation for the next 5 years is north of 50%. So if we're right on this idea that Teladoc is becoming that healthcare, certainly a healthcare information backbone, but healthcare backbone of the United States, this is a very big idea.
And the other two she's loaded up on is Intellia Therapeutics, NTLA is the ticker. And we can see here on Lucid Tracking right here, in the Ark K, she has around $563 million worth of this one, and Ark G, another $193 million. And then she loves CRISPR, right? I mean, you're looking at an Ark K, $448 million, and then an Ark G around $152 million. And the reason why she loves these kind of stocks, guys, is simply because of the huge growth rate they're expecting. In 2020, it accounted for around $22.7 billion. They're expecting that to double in 4 years from now to $54.4 billion, compound annual growth rate of 19%. And this is where I come to you guys, right? Because I'm torn on genomics. Teladoc is one thing, that's healthcare, I get it. But the genomics side of things, which we all know eventually should be the future now, and I'm talking about the United States right here is where I'm going to talk about this. And for those of you in healthcare, please let me know in the comments what you think, or if you're a genomics expert. But, you know, people are surprised that these stocks have just been beat down and just hammered and hadn't gotten more love and stuff like that. And so the one thing about the genomics sector, which I question, especially the growth rate of it, is, yes, it's supposed to be the future. But as we've seen, EVs, were supposed to be the future in 2013, like then, right? And so, but you see how many years it took Tesla to actually even gain traction as far as the stock price and a company? And it's simple. In America, it's not what's best for us, okay? You gotta understand, the reason why genomics will always be held down in this country, it's gonna take, I think, a lot longer than most people think, and this is just my opinion. And like I said, give me yours in the comments. But here's my argument to that. There's a great documentary, I believe it's called The Bleeding Edge on Netflix. Go watch it. I learned a lot from it, and actually did factually check a lot of that stuff. It's actually true. And so understand, in America at least, remember, healthcare in America is for profit. It's not like that in a lot of countries, okay? There's a reason why you hear athletes, famous athletes, going to Europe, right, to get stem cells injected and other kind of medical services done for them, and not here, okay? Because here it's all about surgery. Okay, you gotta understand the medical device industry is like, I think it's like 3 or 4 times the size of the pharmaceutical industry. And they're very quiet, but we know what kind of hold the pharmaceutical industry has in our government, how many checks they write and all that stuff to keep opioids and everything, you know, being subscribed, to keep marijuana illegal on the same list as like crack cocaine and stuff. Okay, there's a reason for that. All right. And so the medical device industry is much, 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 much bigger, and they quietly write much bigger checks, right? We're talking about, I mean, think about it. We're talking about going from an MRI machine all the way down to a tongue depressor. All that's medical equipment. And then what they do to control it, I found this out, they take ex-CEOs and board members, and they are put on these, the government, like CDC and those kind of places, to actually control it, to make sure certain things don't get approved, right? Because remember, the old saying is, if a surgeon isn't cutting, he ain't making money, okay? And so, for example, that's why stem cells in this country have been so hard to get, you know, research and funding and try to break that through, and other countries are way ahead of us, light years ahead of us on that stuff, because it don't make anywhere near as much money, right? I mean, they would rather, you know, instead of, why do you think we didn't cure cancer or something, you know? Because the treatments are so expensive. They make so much profit off the treatments. Forget a cure, right? And that's not going to happen. And so injecting stem cells in somebody's knee versus actually cutting them open and put a knee replacement or a hip replacement, which is like 78 grand in this country, depending on what state you're in, for a hip replacement, you know, which one's going to make more money? It's going to be the hip replacement, okay? And so that's my biggest question, since we're the biggest, you know, market out there, right? Biggest economy. If ours is for profit and more profit will be made off of the surgeries and everything else, the medical equipment and everything else, versus genomics and things like that, where they can literally just give you a shot of something and say, oh, you're cured, you know, or we can cure, like she's always said, they can cure cancer, cure all this stuff with it. And I agree with her totally, but are they factoring in the government part of this, right? Have we learned from how long it took the EV revolution to actually start to take place, okay? And that's no accident. That's because Ford and GM and all the rest of them decided to start going into EVs, right? And so then they started getting the government to change their mind and start putting out even more subsidies and things like that. But they held Tesla down for a long time. I've done a video on that, showed you detailed video on that right there, proved it to you. And so that's just my question, because that's my, I guess, my thesis. And so I'm just curious to get your thoughts on that. Do you think it will suppress these companies? How long do you think it will suppress these companies? And, you know, and the stock price and all that good stuff. So that's where I'm coming from on that. Let me know what you think. And the last thing I'm gonna leave you with, what Cathie was said a few days ago, which was, when your ETFs are down this much.
When we go through a period like this, of course, we're going through soul searching, saying, are we missing something? And we double down on our research and we double down on our modeling. What you should also know is, to get to that 40% compound annual rate of return, we assume massive multiple compression from today's levels. If I can just finish, sure. One of the reasons our multiples are so high right now is our companies are investing aggressively to capitalize on the 5 innovation platforms involving 14 technologies that we believe are going to scale exponentially during the next 5 years. And so we assume that the valuations are going to compress to FANG-like valuations. So it's a serious compression of multiples assumed, and we still get to that 40% compound annual rate of return.
And so, you know, let me know what you think, guys. I just want to put this out there again. A lot of this came out yesterday around 2:30ish, and so it's kind of hot off the presses, but I wanted to combine it with what Jerome Powell was saying and everything. And so let me know what you think in the comments, all right? And hit that like and subscribe button if you did get anything out of this, and I will see you guys later.